Today is the 10th of January 2016, so we're now just 10 days away from Donald Trump getting into office. Flicking through a few news articles today, and generally I don't cover anything from Bloomberg, but I thought I'd just read a couple of paragraphs, and this is mainly aimed for my British listeners and anybody interested in currency and Brexit news. But following this article, I'll do a quick update also around the gold, silver and Bitcoin markets with some interesting points. So starting off with this article in Bloomberg, and this is posted the 9th of January, last night. And this is relating to Prime Minister Theresa May. The Prime Minister told Sky News that leaving the European Union will be about, quote, getting the right relationship, not about keeping bits of the membership, end quote. Quote, we are leaving, we are coming out. We are not going to be a member of the EU any longer. So the question is, what is the right relationship for the UK to have with the European Union when we are outside, end quote, she said. Quote, we will be able to have control of our borders, control of our laws, but we still want the best possible deal for UK companies to be able to trade in and within the EU, and European companies to operate and trade in the UK, end quote. So the key points that she's obviously trying to put across, and it's really quite simple: control of our borders, control of our laws, and for businesses to freely trade in amongst the European Union. So these are quite reasonable requests, I think, if you're leaving a bloc state, which is nothing more than a dictatorship. So what's actually happened in relation to this being aired is the UK pound has dropped 1% overnight. And obviously not forgetting, on an unrelated topic, but kind of still related because it's currency, the Japanese yuan, which again, the day before, also dropped 0.087% overnight. And this is all devaluations that are occurring. But what I wanted to hit on again was this next article, which came out again from Bloomberg, 9th of January. Merkel says UK must observe 4 freedoms in EU unity call. Otherwise, UK will have to settle for less than full access. German Chancellor flags election year themes in clone speech. And obviously we all kind of know that this woman is very Nazi orientated, especially high up in this Brussels organisation. So German Chancellor Angela Merkel demanded that the UK adhere to European Union rules on freedom of movement in return for market access, as she called on EU member states to stand strong in the face of global challenges. So for starters, I mean, just the total language that is used, demanded that the UK, which is nothing more than a dictatorship command, which if this was being said to me, you would not get the best reaction out of me if you demanded something from me. So I think these people are starting to forget that they're losing the grip of power, and that by demanding what they want is not the best way to perhaps approach the losing battle that they're facing. And that style of language continues in this article. In her first policy speech of an election year, the German leader laid down her demands as UK Prime Minister Theresa May's government prepares the country's exit process, set to begin by the end of March. Aiming to maintain good relations with Britain doesn't mean caving in once Britain talks get underway, Merkel said. Quote, we have to be clear, on the other hand, that joining, having access to the joint market can only be possible on the condition of conforming with the 4 freedoms. Quote, Merkel told a gathering at the DBB Civil Servants Union in Cologne on Monday. Otherwise, the UK will, quote, have to settle for less, end quote. Reiterating her warning not to allow, quote, cherry picking, end quote, by the UK, Merkel said anything other than full compliance with EU rules regarding access to its common market would have, quote, fatal consequences, end quote, for the remaining 27 member states. Quote, we can't accept such consequences, end quote, Merkel said. So I think it's quite evident that Merkel is more than aware that she is standing on a sinking ship, and by effectively throwing out threatening statements, which obviously we were all more aware of during the Brexit process, and that didn't work then, so this is clearly not going to work now. Theresa May and the UK have, what I believe, have lost control of their country through the EU Union, and it is the aristocrats that have swayed the movement for this leave vote to occur, because at the end of the day they are the ones that are not having a say in what happens inside of their country, in their lands. So it's quite clear that the hierarchy inside the UK are definitely going to splinter from the EU now, and it's going to be the bureaucrats inside of the Brussels self-elected, self-appointed states to try and ensure they still have migrant access to the UK in order to destabilise. So that's going to be Merkel's main point. And it goes on to say, quote, "We need to have joint positions on a range of issues, including trade, climate to domestic security," end quote, Merkel said. Quote, "Otherwise, we split ourselves along the line of divide and conquer, each one giving our own signals. Then Europe won't be able to develop its strength." And this is a very unusual combination of words, I find. And it's almost laying out an agenda within this one paragraph. We need to have joint positions on a range of issues, including trade, climate and domestic security. And we all know that they want to create a European army. That's something that's been in the agenda for quite a while. Now she says, if member states start splintering away, then we will no longer be able to divide and conquer. Again, words that we are aware that relate to the reason of the migrant influx, because that is exactly what is going to happen in the communities. It is going to divide the communities, to which then the state will offer a conquering quest, because it will divide, and by doing so people will look to the state for reaction. People will look to the state and the governments to remedy the situation. Problem, reaction, solution. Multi-division, multi-conflicts over all kinds of different related subjects, be it Black Lives Matter, be it Muslim Lives Matter, be it White Lives Matter, be it Religion Lives Matter. Whatever the divide aspect is, it all creates division, which ultimately can then lead to mayhem and out-of-control societies, out-of-control riots on the streets, which again ultimately revert back to capital controls, enforcement, new laws, all for the protection of the people, but in return stripping them of every single personal right. So as far as I can see, in this Bloomberg update, which does nothing more than pretty much anger me, it still gives me a glimmer of hope that Theresa May will potentially try to do the best deal possible for the UK, albeit she's just as corrupt and tainted as the rest of them. But from the point of view of the UK breaking away from the enslavement trap that it was in while being a member state, if it is to be a prison state globally, at least it'd be better being a in-house prison state, where at least the people can rise up should they have the capacity, and then take it into the central London district to voice your concerns. Whereas if you're still trapped inside of a European bureaucratic policy, where 60% of the laws are made, I believe, for all members, then if you have disagreements with the laws being placed upon your country, then you have to take it to Brussels, which means every man and woman has to march into Brussels to complain, and even then your voices won't be heard. But anyway, it's going to be an interesting few months as soon as this deal is set up, and Britain is the first to obviously disentangle itself from this severe spiderweb it's found itself in. And what comes the other side, only time will tell. But obviously the disintegration of the Eurozone is definitely in everybody's interest. It's just a case of what evolves out of that mess. But many believe, better the devil you know, or simply just don't even understand the complex nature of being trapped inside of the EU nations. So that's enough of that doom and gloom section, and I'm going to be heading over now to some gold and silver related updates. So I'm going to be covering this on a 1 month time span. To start with, on the British pound. Now obviously I'll be doing some cross-referencing over again to the US dollar, kind of like I did a while ago with my metals and markets update. So what's interesting to see is how the UK pound is actually diminishing as other currencies remain quite, not stable, but not being hit quite as hard as the pound. But what happens is it just goes to show what a protection asset precious metals are during the fluctuations that the currencies are taking. I mean, we're all aware that the metals get hit via manipulations and things like that. That's just part of the punches that you've got to roll with just for now. But I'll show you what I'm talking about in the US dollar term, and this is on the 1 month chart again. And it's showing that the movement percentage inside of the US dollar in comparison to the UK pound for gold, say from the time period of December the 26th, where it was 11.33, is now 11.85. So there's been a $52 gain in that period. And obviously we've had a nice little spike rally at the beginning of January. Now if we take that back over to the UK pound, again, from the 24th of December period, it's set at £922, and it's now risen to 974, and that's a £52 move. And obviously we know the ratio difference between the pound and dollar is 1.21, so average speaking, you've had a higher gain inside of the UK pound, again partly due to the 1% drop in currency value as of yesterday. Now obviously Eurozone is a pretty much similar story, and flipping over into the silver markets, from December the 24 period has only seen an 80-cent move, and in UK terms we're up to about 90 pence, so much better moves in silver in UK terms. Now moving over to this website, didthesystemcollapse.com. This one presents quite a lot of detailed information, which is really good, and I will reference it from time to time. Now something I wanted to make aware to you guys is obviously the Western paper market prices compared to the Shanghai physical markets. And this is the arbitrage area between the difference in sale prices, purchase and sale prices. And something which actually is starting to look quite interesting, how silver is moving into this danger area. And what in particular is interesting is the valuation here. So this means that China is paying $18 for an ounce, but obviously in the West the spot values are $16.61. Now with the difference being 1.43 US dollars, which is not that far away from 1.66, we're talking 26 cents. That is very close to a 10% arbitrage between purchase and sale prices from west to east. And that is something really important to watch, because obviously as this arbitrage moves closer and closer, that is showing you that everything is draining from the west to the east, and the west is unable to get hold of physical unless prices are raised. Now obviously gold is a lot tighter in that margin, so silver is the one to be watching, because we're more than aware that silver is the Achilles heel, and that it only has about a 1 billion US dollar production per year at these current values. So what I'm now going to show is on this US dollar link, it gives you the breakdown of the Bitcoin pricing during the last 30 days, and obviously you can flick through here and check different charts, but for me on this video we'll leave it on the 30. Now what I'm going to show you here is the price moves in currency during the past 30 days in comparison from US dollar to whichever I select through here. So starting off with the US dollar, the dollar is down 0.054% against the euro, which means the euro has climbed in the last month, and the Canadian dollar, the US dollar is up 0.26%, and these are all very small margins, but you'll see why I'm doing this in a moment. The UK pound, as we know, dropped 1% last night, but during the other 29 days, the US dollar has been on a gradual trend upwards, totaling 3.54% for the month. The Chinese yuan for the previous month, again, US dollar is up 0.24%. Japanese yen similar numbers, and the Australian dollar is down 1.23% against the US dollar. But when we flip over to the Bitcoin section, the Bitcoin move in comparison to the US dollar is up 17.71%, and that's also accounting for a huge rally that Bitcoin went up on, where it reached up to 1100 US dollars in that sort of region. And obviously that was a big sell point for any investor that was inside of it, which is what caused that crash to then occur. But out of that, it has now stabilized back up to the $900 range. So that's taken into account obviously the high peak and the correction phase which is occurring now. But it shows that it's still in a stable market and that it is going to rebound out of that. Now you probably hear a bit of background noise now, and that's just the fan kicking in the computer, so apologies for that, but there's not much I can do with this. So flipping back over to this gold chart, I want to reverse it back and show you where exactly we're at on a 20-year scale. And with anything physical precious metal related, you always need to look at it as a long-term investment, not a short get quick rich sort of scheme, but more a protection over time during these very unstable markets that we're in, which are just being artificially protected at the moment. But if we go back to sort of around the 2004-2006 period, when sentiment was, everything was in a euphoria state, housing prices were going fantastically high, everybody was making lots of money, but just look what happened on that spike from 2006 upwards. Now obviously down in 2005, in UK terms, you could buy a kilo of gold for £7,500 in that sort of region, obviously plus premiums and that sort of thing, but around that number. Now if you see how that rallies during these economic turmoil times, during the 2008 crisis, you can see the numbers jumped to 36,000, which is a fantastic gain in that period. And we're aware that obviously the suppression that occurred shortly after that during the next couple of years. And obviously if you understand trade and charts, you will understand that this is a cup forming down here, and we've had a sharp breakout obviously in 2016, which has been long awaited. So this period through here is nothing more than what would be classed as a consolidating phase in a traditional market. But obviously we're aware that this has been a superimposed suppression in order to give the artificial impression that paper markets are the place to be and that recoveries are occurring. Well, this short snap out spikes that have occurred in the last year have shown you that that is not the case, and extreme uncertainties are now spreading globally, and we know that. We've seen the videos, we've read the articles, and we understand what is occurring in the markets. It's just a waiting game as to when this is going to really snap. Now what things like Webbot are predicting is that there is going to be a sharp move up, and we have already seen these two sharp moves up in less than a year. But the sharp move that is being predicted is going to be, in the Webbot terms, generational growth in wealth. In other words, not short snaps like we've seen here. Now again, referring back to the longer scale on chart analysis, this is also indicating a bull flag move. And for those of you not aware of a bull flag move, it moves like this. The pole flag with a consolidation, it then has the same projection as the original pole flag. Now if we revert that back into this rise here, which occurred throughout a 4-year span, a 5-year span, we can tap that onto the end of that. So if it's had a move from say £10,000 to 35,000, that's a gain of 25,000. So we can add 25,000 onto today's gold prices, which should send it to 58,500 in UK pounds per kilogram. And that's only if it does a bull and flag move. But obviously the predictions are that the markets are so out of whack with the true valuation of this, which has been artificially suppressed, that we can anticipate it to move way higher than that and way faster than that. So that's the potential which is going to be occurring during the next 1, 2, 5 years time, who knows. But it is definitely now breaking out of this region, and obviously it can then be smashed back down again. But that can only occur for as long as the paper market game can continue. And obviously with capital flight occurring through major currencies, because people are waking up to the fact that by holding fiat form, they are being devalued and eroding in purchasing power. So people are moving into other asset forms like Bitcoin and precious metals, simply because the more people educate and understand those two forms of assets, and yes, they both are asset forms, that is the ultimate place to park any wealth that you have in order to capitalize on when these paper markets flip. And everything is a market cycle, and everything has its day, everything goes up and everything goes down. Now, to artificially suppress this market only means that the reverse trend is going to be catapulted in speed. Now, flipping back over to the Bitcoin section here, if we take it back to the 1 year move. Now, the thing about Bitcoin is a lot of people are in it for investment long term, and a lot of people are also speculative traders and buyers. So that's something to also be aware when you see extreme rallies occurring, like what has just occurred from the end of December to this January period, when suddenly the market dropped back out again. That's purely because of traders dumping a lot of their Bitcoin holdings, because on an all-time chart view, that is how traders make money. They know that this Bitcoin market has its dumping phases. So if you understand that, then you will know when to purchase and when not to purchase. But the issue with the human condition is they see a rally, they see something moving fast, like it moved at $100 in a day, $200 in a day, that sort of thing. People are concerned that they're going to miss that rise. So they get in, they pile in, and that's what happens. That's what causes these extreme spikes, because you don't really understand how it's working and operating, and you just hope that you can get in at the right time and get out. But if you're buying at any particular point throughout this area and holding for the long term, it doesn't really matter at which point you buy it, because you're the long-term holder. You're buying this because of its anticipated decentralized potential that is disruptive to the central banking system. Not to mention all the brilliant minds and all the brilliant inventions that are being created through this industry. Now again, if we check out this chart move via analytical chart readings, again, it's the cup shape that is being projected here. So if we flick over to this image here, generally the stock or the commodity will trade in a cup shape. There'll be a consolidation phase for the handle, and then it will break out again. So that is something that we can expect to see here, which we know is going to be coming down due to all the sell-offs that have occurred. There's going to be a consolidation for the handle, and then again via multiple predictions and links via what Donald Trump is going to do to the financial markets, what Webbot is predicting, what Kim.com with his mega upload is going to be creating. There's going to be a huge influx into this Bitcoin market, which is going to double its value. Many are anticipating over to $2,000 this year. And that is going to be that next spike up here after this handle period for the next, month maybe, something like that. And then we might see a trend upwards. So basically, fantastic times to get into any of these assets and ride these waves, and don't worry about any moves up and down unless you're obviously a trader. But personally, I'm a long-term holder, so that's my outlook and that's my suggestions to you guys. Obviously, invest into these markets any way you like. This is nothing but free advice. Anyway guys, I'll leave it there, and thank you so much for watching. I hope you enjoyed this video. Please do leave any comments, and I'll see you shortly on the next one. Take care.